Welcome, everyone. We are here for another edition of Coffee with the Founder. Sometimes we drink coffee, sometimes it's just water.
Yeah.
Today, it's just water. Patrick, what are you drinking?
I've got a water as well. It's about
Okay.
half full, right? And I noticed
Yep.
I didn't say half empty, but yeah, water as well.
Noted, noted. You are the CEO and founder of District Cover, data-driven commercial insurance,
Yes,
specifically for small businesses and really, frankly, neighborhoods that don't usually get insurance, or
correct.
it's really hard to get insurance. Let's start with that. Why is it hard for a warehouse, for example, in maybe a less than rich neighborhood to get insurance?
Yeah, I mean it's a number of factors, but at the end of the day, it boils down to these are inherently riskier from an
Mm,
insurance standpoint areas, or at least the perception is
yeah.
that they're riskier, right?
Yeah.
And that's really where we play, where the industry at large has sort of viewed an area, often at a zip code, an entire zip code or entire city,
Mm-hmm.
with a broad brush and says
Mm-hmm.
you're risky.
Hmm.
That's where we come in and try to sort of unpeel the layers of risk and make a much more granular assessment.
Hmm.
But at
Can
its
we
core,
go
they're
ahead?
they're just harder to insure.
Okay. And to clarify on the risk, what you're more likely to get a rock thrown your window, you're more likely to be on the marching path of fire happening, you're more
Yeah,
likely
you
to
got
have a
it.
police
You
raid.
could, yeah,
You're
you
like,
could
I'm
you
like,
could underwrite this stuff. No,
oh,
it's
okay.
exactly right. So it's going to
You're likely
be
to have a drug dealer inside. I don't know.
absolutely. So it's,
Huh.
if you look at kind of the main perils that would face like a business in
Mm,
a inner city
mm-hmm.
neighborhood, fire. So you mentioned fire is definitely one. There is a
Yeah.
greater propensity for fire in these areas. Oftentimes because of, you have mixed use buildings where there's restaurants with apartments.
Yeah.
You've got more vacancies. You've got homeless encampments that can start fires.
Oh, yeah. Mm-hmm.
You've got crime. So you hit
Yeah.
that nail on the head there. Crime, generally, we're looking at vandalism, theft,
Mm-hmm. Mm-hmm.
assaults, those
Mm-hmm.
types of things.
Mm-hmm.
You also have more foot traffic, right? So more foot traffic can create just more exposure to
Liability.
things like slip and falls. And,
Yep.
we were talking about New York City, one of our favorite cities before starting this. And like, so in New York, if you are you rent a commercial space and you're operating a restaurant, cafe, deli in that space, if I trip and fall on your sidewalk, I could actually take legal action against you. So certain cities have, more
It's
litigious
crazy.
climates that add to the exposure as
Yeah.
well. So it's all these things kind of
Yeah. Wow.
compound.
Yeah.
And then I'd say the last thing, which maybe goes unsaid, is, a lot of the companies making these products and insuring them, they're
Mhm.
not necessarily from these neighborhoods. They haven't spent as much time there.
Right.
They don't understand them, so they can't
So
sort
they're
of get
scary.
beyond. Yeah, but you could
Mm,
say that. Yeah, they're
mm,
they're scared or they're uncertain, right? And in
mm.
insurance, you're trying to manage
No
volatility and
uncertainty.
uncertainty. Yeah, that's not a good thing. Yeah,
That's not. That's not.
right.
Fascinating.
But look,
Okay.
the more we love it, the more this exists in the world and these perceptions, and
The
sometimes
better
they're
for
true,
you.
but we can that creates the opportunity for us. So we
Hmm.
have a tagline. I don't know if it's on the website. It's definitely been in Investor Decks.
Mhm.
Where others see risk, we see opportunity. So
Mhm.
yeah,
Hmm. Sounds like a PE shop too. It could, but in
maybe
insurance it works
someday
well.
we will
There,
be
there,
attractive to them. Yeah,
there we go.
yeah.
Okay. What gave you the idea for this other than you were in insurance? You've done a lot in insurance. For example, you were at Hamilton Insurance.
Yeah.
Maybe you've been just up close to too much insurance, but tell me what made you go, aha, okay, we got to do this.
Yeah, that certainly helped, right? I had been on the side of the coin at places that had been saying no,
Mm,
right? So I sort of was firsthand
mm,
doing what we're now trying not to do. But that's probably the boring part. I'd say the exciting part, or sort of the real motivator for me, was, so I'm originally from Minneapolis. And
mm.
if you look at what happened in Minneapolis after 2020, certainly Minneapolis was
Yeah.
in the headlines a couple months ago. But rewinding back to 2020 and post George Floyd, there was a lot of obviously damage, rioting, civil commotion, call it what you want. But at the end of the day, there were businesses and buildings and a major thoroughfare of the city that suffered a lot of economic damage. And that economic damage
Yeah.
estimate was $500+ million, right? So not a chump change by any means. And the insurance recoveries on that, right, was
Mhm.
a little over 200 million. So you look at that gap,
Oof.
right? Like 60% of the loss wasn't covered by insurance. And as someone
Yeah.
who's kind of proud to be from insurance and think we have a good product and we can help a lot of people and businesses kind of prosper,
Mm.
to look at that in a place that I'm from and have spent a lot of time in, like we didn't show up, right? So I started to really say like, why did this happen, right? And as you
Mm.
start to research it, it's a whole host of things. It's misalignment of an understanding of risk. It's fewer agents. It's businesses that don't speak the language that the product sold in. And you learn that this has been a problem since the 60s when there were
Mm.
racial riots and things like
Yeah.
that. So for me, it was a personally motivating sort of case to say, hey, I want to build something that reduces this gap, right? Like, can we
Mhm.
get to 100%? Probably not. There's always going to be deductibles and
Yeah.
things non-buyers, but we can do better than 40. And
Yeah.
that's
God.
why we started it.
Okay. So how are you de-risking that then? For
Yeah,
instance,
yeah,
in
no,
other insurances companies we work with, you're using, of course, AI, you're using different
sure, yeah,
visualization, drone footage, things of that sort, Google,
yeah.
using a suite of technologies to de-risk as much as you
Yeah.
possibly can on the asset you are insuring. What are you looking at?
Yeah, I mean, I honestly like it does this is gonna sound kind of like cliche but it starts
Okay.
with just a mindset. Like you
Yeah,
have
that's true.
to I think insurance historically says, give me as much data as possible so
Mhm.
I can say no.
Mhm.
And what we're trying to do is get all that data to find a way to like say yes. And so first of all, we have that mindset. And then look, we've just gotten more granular, right? So we truly try to understand the risk at the individual block business level. Take crime, right? You mentioned crime earlier. 70% of the crime in a zip code happens in like 30% of the square blocks. But everyone in the zip code is treated effectively the same from that standpoint. So when you do that assessment for crime, you do that assessment for fire, for GL,
Mm.
you look at the business and sort of how it's operating versus, its peers. You can start to find ways to say, okay, I can do this. I maybe can't do that, but could maybe do it this way.
Mm.
So the models and analytics, the AI, that for sure exists. And then the other piece is we actually are trying to make businesses more insurable, right? So it's one thing
Mm.
to like
Yeah.
find the good risks within a challenging pool of risks, but
Yeah.
we view part of our value prop as like, well, can we make the marginal risks just better, right? Like, what if they understood in
Mhm.
their language like 5 things to do to prevent an event from happening, right?
Yes.
And
Yes.
we learn from claims that we've paid, right? So like we have had a loss scenario where if the water would have been turned off in a freeze event, the sprinkler wouldn't have burst, right?
Mhm.
So how do we make sure a business owner who isn't thinking about that stuff, they're thinking about like, how do I sell this product better to that customer? Or how do I meet this deadline? Or how do I make sure my inventory shows up on time?
Mm.
If we give them a little risk management playbook and they know like, hey, if the
Mm.
temperatures are below X
Yeah.
for, how do I turn off the water? Does anyone even know how to do it? Right. So
Mhm.
we're trying to kind of, I would say, boost the insurance literacy or understanding for the businesses, in addition to giving them like a product to protect
Mhm.
themselves.
Have you even done the, like, blast classical music outside of your place?
Yeah. Yes, that would probably lead to some nuisance claims, but
Possibly.
thankfully we don't really cover that.
Yeah.
But funny you say that. So we're about to launch like starting to write mixed use property, right? So
Oh,
again,
yes,
that New
yes,
York
yes.
example, retail with a couple of apartments. And one of the kind of interesting data sets that we're using to sort of build this out is like new 311 like nuisance
Yeah,
complaints.
yeah.
And the classical music example, it doesn't necessarily permeate in everywhere we'd want to write, but there's a lot of that, right? And
Yeah.
the landlord who allows these things to exist maybe is not quite as in tune with their residents as others.
Mhm. Yeah, it would be if you're in a mixed-use building and all you hear on outside the Walgreens that you're 2 stories up from is it Bach, 8
Yes.
hours a day, be like, "Geez, man."
Yeah.
It's
Or
too
I
much
just think
to
about
deter
that, like,
loitering, Yeah.
that dentist playlist, you go to the dentist and
Oh,
it's
it's
like
the
the same,
worst.
every
Yep.
dentist is the same. That'd be a
That's
safer
yeah.
risk, right? Yeah,
Oh man.
for sure.
Oh man. Okay. Are you having fun, Keith?
Yeah, for sure. Right. You have to, right? Like
The only way is fun.
yeah, we only have so many, we get a finite number of hours in a day. And, I
True.
got 3 little kids and like,
Yeah.
you gotta like it and have fun if
Hmm.
you're going to choose to do it. And
Hmm.
look, as you
Yeah.
know through your show, right, there's a
Oh,
lot of setbacks. The lines
oh
aren't
God.
linear. And if you're not having fun, like with the people you work with, your investors, your partners, I don't know
It's gonna be
why,
a hard time. It's
I
a
don't
hard
know
time.
why you do it. But I
Yeah.
am
Good.
not every day, but the majority of the days for sure.
Mm, good. What about an unlock you've had recently, Patrick? It could be personal, it could be
Yeah.
business. I like to ask this because I learn little tidbits and things from all
Yeah.
types of people.
Yeah, I'll do a business one here
Mhm.
that we actually got this from one of our venture investors. And, it was great advice that he had
Hmm.
picked up in
Ooh.
his career. And, you're always looking at your invest you're trying to get them to help you. And
Yeah.
and oftentimes they're, venture investors haven't always been operators, right? So,
Yeah.
but this particular example was really helpful and he was. But basically it was the saying was it's okay to be wrong. It's not okay to be confused. And I
Oh.
think that, yeah, I mean
Mm,
that's
mm,
good, right?
mm,
Yeah,
mm.
yeah.
I
So,
like that.
we I
Mm,
think we early days, like we were, I felt like I was pretty clear minded. And you bring your first couple of employees on, and everybody kind of, marches, kind of knows where we're going. And then a few more show up, and a few more, and you're in market, and now we have 25 people.
mm,
And, I think towards the end of last year, as we did planning for this year, we really just took a step back, and some of it was feedback we got, some of it was just introspective,
mhm, mhm.
and I think a lot of people, there was confusion, right? And we weren't entirely as clear as we needed to be on the priorities and the mission and why and how things were related. So we really spent a lot of time, probably to the point where people were like, why are we still doing this? But I think it was really helpful in terms of making sure everybody's on the same page, telling people it's okay to make mistakes. We're going to get assumptions wrong. Lord knows I've gotten plenty wrong. And that to me, just having that mindset and freeing that up has been just a huge unlock in terms of
Hmm.
planning and just like feeling good about making mistakes, frankly, too.
Hmm. Okay, so tell me a little bit more about the cadence. How do you manage the cadence to deter the confusion?
Yeah, it's tough, and it's tougher in a remote, we're kind of a remote forward. We have kind of
Same,
pods of people
same.
in different areas, but we're not sitting
Yeah,
together all the time.
yeah, same.
I think that you got to get on, a few things. So like, we do annual planning that we then break
Yeah,
apart into quarters. And then within sort of each quarter, you have obviously 3 months, and within the
yeah.
months, you have checkpoints. So we do have a regular sort of
Mhm.
structured review of what's happening. The other thing we've done is we've set up our performance management structure to be, instead of annual, it's biannual. So each individual that, and everybody is eligible for sort of performance incentive comp, they're evaluated over a 6-month horizon versus a full year.
Yeah.
And the reason for
Way
that
better.
is,
Mm,
one, it
way
can
better.
get them cash or whatever, more
Yeah.
equity quicker, right? So
Mhm.
they like that. But two, it allows us to just, have some moving targets. Like, again, the lines aren't linear, right? So goals change, the market changes,
Yeah.
we learn something new. So if you actually anchor it to an evaluation period,
Mhm,
that we found to be pretty helpful.
mhm.
Because you have to, right? You have to then say you're on track, off track, do more of this, stop doing that. And
Yeah,
if you do that
also
only annually, you're stuck.
yeah, also recency bias. Out
Totally.
of a whole annual thing, you're like, "Well, but 2 weeks ago they did this, and that was pretty good. Forget the other
Yeah. Yeah, and
7 months
oftentimes
prior."
you're doing it in like midway through the next year's first quarter, and you
Stupid,
can't. Yeah, so
stupid.
I think that's helped, but you have to be sort of deliberate about
Mhm.
actually like creating a calendar
Yeah,
and
you
trying to
do.
stick to it. Yeah.
Oh, yes, we call this operational rhythm.
Yes, which
Yeah.
I am not good at, so I have
Ah, okay.
helps me there.
That's why though, you set it and forget it. You get it on
Yeah,
the
that's
calendar,
right.
it's done, it's boom, and da 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 da. So,
Absolutely, and look, that there's an area where AI, can
oh,
help
oh
in
yeah,
that regard. Yeah.
oh yeah. There is no excuse, I think, at this point, Patrick, for you to not be on your shit, given all the AI tools. You have a bot every day that can ping and say, did you do this? Did you do that? Did you do that?
Yeah, that's true. Yeah. And we look, we're not, there's definitely more we can do. And look, one of the things that I think people tend to gloss over too is like, we are in a risk-based, heavily regulated space. And there's data, we have to be careful about what data goes where and who has access to it, but which adds maybe one layer of complexity to utilizing the tools. But yeah, by and large, like you could envision a world where our underwriters open up their dashboard and it's like, here's what you need to do today. And they're sticking through that list. I mean, we're not far off from that.
No, we're not.
Yeah.
We're not indeed.
We try to at least make it so the machines aren't making the decisions for them, but they're guiding the process for sure.
Yeah, I don't think anybody wants to be under the machines,
not.
frankly. Okay. What have you changed your mind on, Patrick?
Yeah, I think great. Love that question. And again, those are questions we try to ask ourselves a lot, right? Kind of in the spirit of that confusion piece. But I don't know, I think for me, like just rewinding back to like the creation of this business. And, I think there's a natural tension that exists between sort of financial return and how big can you be and income and valuation and social benefit. Right. And I think that I kind of thought, they couldn't they were mutually exclusive. Right.
Oh.
And one of the things we've found here is that the closer we tie it all together, like the better we go. Right. So I think that we very much, I think before I was kind of like, you either run a nonprofit or you run a for-profit. They can't coexist. And I think what we've learned quickly is that if we keep the mission at the forefront, and we drive, those are often the better financial decisions, right? Like if we truly are trying to point towards ensuring the toughest areas historically, well, we convert better there. Generally speaking, those are going to renew at a higher rate. And those are, we have to spend less time getting something because it's easier to market to that segment. So, I think that's one thing I think I have come around on that I maybe kind of how I, growing up and being a business major, MBA, you don't necessarily, you unlink the two. Because I think we've been taught as a society to do that.
I agree. And I feel like we slipped a bit into the, but you could, buy a pair of shoes and it gives one and the whole, we're over there. It's come back on the other side. But that said, you could still be doing something beneficial to everybody and still make money. That does exist for sure.
Yeah. And look, it's not, we are a venture-backed company that has aggressive growth and profitability targets. So they coexist. But we also are very clear with the investors we bring in, the employees, like our employees want to be doing this, right? So it's part of a retention strategy as well. But you're not, we don't, buy one policy, get a second one free or give it to your friend who runs a restaurant across town. That has not made its way to our ethos yet. I don't think it will, but
Do you find, kind of last question to wrap us up, that this is a pull for the people you attract to work there?
Absolutely. I for sure. Right. Across the spectrum of, different backgrounds, but absolutely. We try to include it in sort of total, our total compensation. It's like, hey, you're working for a purpose and a mission. And it's not in lieu of something else, right? We still pay well. We have great.
Oh, yes.
But it's, people want, again, it goes back to that, like, are you having fun? How are you spending your time?
Yeah.
And I'd rather spend my time on something I care about and am passionate about and is helpful than something that like isn't that, right? So I think that it's, there's certain people, investors, employees, partners that if they don't get what we're doing and why, it's less likely to be a fit.
Yeah, sure. Not for me.
Yeah. Good. You got it. You got it from the beginning, which
not
is great.
For me. Yes. Yeah. Patrick, thanks for being on today. This was lovely. I enjoyed our chat.
Yeah, Beck, absolutely. Thanks for having us. And maybe next time we'll do it over something other than water.
In person would be good. Also, Godspeed with the kids in summer.
Thank you. Appreciate you too.
You're in the high season now, sir.
Always. All right. See ya.
Bye, Patrick. See ya.
Take care. Bye now.